This is Sahura will be with you with the global economic outlook in the week ahead, the week of 34 in 2025. As always, let's first check what we had previous week, and then we can go forward and check the week ahead. Previous week, it was somehow a busy week with too many, too much economic data from especially United States, China, and Japan. In United States, inflation was at the central stages. We know that the consumer price index increased by 0.2%, and core PC price index, core CPI, increased by 0.3%, both in line with expectations. But at the annual scale, consumer inflation increased by 2.7%, and core consumer inflation increased by 3.1%. That 3.1% was the number which so many market participants focus on that and talk about that. Later on Thursday, also we had a producer price index or PPI numbers increased much more than expected, showing that the tariffs somehow affecting the production prices, which means that producer price can move towards the consumer price or consumer inflation in next weeks or next months. That's why we can still talk about the sticky inflation, and that was the reason that increased the US dollar index demand and dollar value previous week. However, at the end of the week, with the Michigan consumer sentiment and expectation, and generally with the Michigan University surveys, we had a slight pressure on the dollar index, but still the dollar was positive in the past 2 weeks. In China, we had this somehow disappointing that we know still the inflation is the main concern, and domestic demand and inflation is still the main concern in the Chinese economy. Generally, we should care more about the Chinese demand, talk about that, and see how the Chinese government and the central banks is going to handle this condition and this situation. But that's somehow sometimes I'm telling that in China the problem is not mainly even the tariffs. The Chinese economic problem is mostly about the domestic demand and consumer inflation. Generally, the data that in China we had about the GDP expectations, export, import, generally with the data we had, we can say that the Chinese economy in the second half of the year can face with more challenges. In Japan, on the other hand, we had very good data, positive numbers. GDP increased much more than expected. Inflation slightly slowed down. Now we have the inflation around 2%. We will have the inflation data in the week ahead from Japan as well. But generally, the data showed that while the Japanese inflation is higher and much more than central banks target, the economy somehow is moving better. That's why we can say that the Japan is thinking about a rate hike. Probably in September, we can have the rate hike in Japan. In the week ahead, on the other hand, going to be we can see some slightly lighter week with in the United States. We'll have the housing market data, and also as all the Thursday we will have the labor market data. While PMI numbers also from the United States and many other economies will be published. On Tuesday, we're gonna have the housing start and permissions. Both of them expected to see slightly weaker than previous months, but still, again, we can see some movement in the housing market. The main reason is lower starts and also lower sale even that in the single houses, but the multifamily houses they're fine. Lower mortgage in the previous weeks maybe can support somehow the housing market, but generally we probably will see the we can see somehow the slighter forward movement, but it's going to be slower compared with the previous months. On the next days, on Thursday, on Thursday we not have too much data on Wednesday. Sorry, we will not have too much data from the United States as mentioned, but on Wednesday we're gonna have the FOMC minutes of previous month's meeting. What we will look in the FOMC meeting, we are trying to understand what Fed members are thinking about the economy and what they're going to say and decide in the next meeting. Anyhow, we have the too many speeches from the Fed members during the week, and these speeches or members will talk more about what Fed is thinking about the inflation, about the economic growth. As Ms. Dolly mentioned previous day, that probably in United States we will have only two more rate cuts, not more than two more rate cuts, and each of them going to be maximum by 25 basis points, which means that in September we'll not have more than 25 basis point rate cut, and 25 basis point rate cut is the most, and more than 90% I mean chance for that, and the most expected decision. Um, the idea of 50 basis point rate cuts came in mind sometimes. I don't know who thought about that, but maybe that could be the media play as well, because on economic front and analysts, we don't see such a condition in the economy to cut the rates by 50 basis point in September. That's going to be that can be most probably the one of the wrongest decision that can happen on September, to cut the rates by 50 basis point. That's why I don't think that was the idea from the economists. Probably that was the idea of the medias, to put the pressure on the central bank to talk about the rates cut. Maybe they got the idea, and now I mean they got what they want, and now the central bank is talking about the 100 or more than 90% chance of at least one rate cut. Maybe that was the idea, but anyway, that what happened. But now the market is expecting only maximum. The economists are thinking about the maximum of two rate cuts in the year ahead, maybe 2025. On Thursday, we will not have too much data from the United States. On Friday, do we have it? That on Thursday, as all Thursdays, we will have the jobless claims for the initial jobless claims and continuing jobless claims. We're expecting to see the labor market somehow the positive numbers from the labor market, and we are not expecting to see that the labor market is going to give us some weakening signal. I mean, initial jobless claims should be around 225, 227,000. Request existing home sale after 2.7% fall in the previous month. This month is supposed to be increased in July. We're waiting for slightly positive data. During the week, we're going to have the Jackson Hole Symposium as well. We will talk about that during the week. It's not a time to talk about, but generally, Jackson Hole Symposium, 3 days, Wednesday, Thursday, or Friday, going to be at the Central Station. We will have too many idea about that. We probably will have the video about that and talk about that, what's going to happen in Jackson Hole and why that's important. Yeah, that was that. And out of the US, we're gonna have the interest rate cut in China and New Zealand. Both of them, they're gonna see the interest rate at the final at 3% in both economies. But in China, it's gonna be holding at 3%, but in New Zealand, it's gonna be 3% with two after 25 basis point rates cut. Currently, the New Zealand economy is I mean, getting some pressure on the economic growth in New Zealand, because you know the situation that we have right now in China, increasing the pressure on the New Zealand economy as well. Chinese demand is slowing, which is the New Zealand biggest export market, so that can affect the export value of the New Zealand and export economic value as well, economic growth as well. That's one of the ideas that the New Zealand should continue the rate cut to support the economy. At the same time, they won't have too much concerns about the inflation, as the inflation already is moving towards central bank's target. In China, the central bank doesn't have too much room to cut the rates, but at the same time, they're trying to support the market, but probably they're going to again continue lowering the reserve ratio requirement, RRR, and also probably some more stimulus. We're gonna have to wait and see. In Japan, in United Kingdom also we will have the inflation data, consumer inflation and producer inflation. We expect the consumer inflation for both headline and sorry, and core inflation to stay unchanged at 3.7 and 3.6%, while the PPI is supposed to increase slightly. Retail sales price also supposed to increase slightly as one of the effects of the tariffs, especially that can be more effective in Germany, the tariffs effect, especially because of the exports, Germany's export, which is mostly that's a vehicle export, and auto vehicle export is to the United States. They're going to pay pay more taxes. So yeah, that can affect the German's economy. About the Jackson Hole, we talked about the Jackson Hole. So mergings, yeah, that's the most important thing that we're gonna have the next week. I mean, not more than this. We're gonna have the inflation number in Canada as well. We expect to see the Canadian inflation again around 2% after falling 1.9% in July. In August, probably we're gonna have the inflation around some in June. In July, probably we're gonna have the inflation around 2%, 0.1% increase. Yeah, that's what's happened and what we expect to see in the market. Let's go and check the charts and see how this data can affect the markets and can affect the charts. Let's start. Since that's a Bitcoin chart, let's continue with the Bitcoin chart. Bitcoin and cryptocurrencies generally they were positive in the previous weeks, in line with the stock markets. We know that in the last months, in the last year, mostly the Bitcoin and the cryptocurrencies they're having more positive reactions, or generally the more reaction to the economic data as the more companies more institute they bought the Bitcoin, so from the ETFs or the spot Bitcoin. So this spread in the market somehow they are connecting the Bitcoin. So this is spreading in the market, connecting that cryptocurrency market with other markets as well. That's why we don't have too much. I mean, such a like volatility market that we had in the previous years. Still, there is a volatility, but not like what we had in previous years. But generally, after that, also markets somehow continuing the trends in the stock markets as well, the cryptocurrency market. That's why the Bitcoin also was increasing in line with the stock markets in the United States, in Nasdaq especially, and now with the slowing down in the stock markets, probably we can see some correction in the cryptocurrency in the Bitcoin price as well. We still have the 113 as the first an important 113.500 as the first important support, but the KP will be at 109,000 US dollar. In the stock market, let's continue with the stock market since we started with that and talk about the stock markets. Stock market generally in the United States previous week, in the last days after the inflation numbers started to slightly falling down, we expect to see this trend to continue lower. Generally, the stock markets is now counting on the data already clear somehow. The inflation is sticky. Labor markets 4.1, 4.2%, even 4.3%. Still strong labor market. While the S&P 500, while the PMI numbers, S&P Global PMI or ISM PMI, all of them, they are mostly about the 50, which means the US economy is still strong and can handle the higher interest rate. That's why we expect to see the slightly higher for longer, which means pressure on the stock market. That's same thing for the stock market. In the same thing for we expect for the Dow Jones, for the Nasdaq, and also for S&P 500. On the energy front, in line with the lower economic growth and pressure on the stock markets, the energy market shouldn't be positive as well. However, the WTI has very important support around $62, and then $60 is the KP vote. Even if the price fall under 60, that can continue much lower, but holding the $60 can hold the price between $60 and $62, $64, and continue this trend. Now on other prices, on the dollar index, you can see the dollar index after a few weeks of continuing falling in last 2 weeks, slightly increased. Previous week we talked about it 98 area, which happened in the previous week. For the week ahead, we expect to see again 97, 98 area. I mean, the side movement with the positive or potential upward potential is generally the market uncertainty is still high. After Mr. Putin and Trump's meeting also, we didn't have a clear data or clear idea of what happened there. They didn't answer the questions. So we have to wait and see what they're going to talk in the next days. But generally, the uncertainty is still continuing there. there is nothing almost changed. And that will support the side movement for the gold as well. Even thought if stock markets was increasing in the previous months, and this dollar index also was increasing, the gold price also increased. And now while we expect to see some pressure on the stock markets, even thought if the US dollar increased, the gold also can support this side movement with the upward tendency, as the market uncertainty need to the safe haven and to all many other reasons. Gold still positive and can continue its trend. Yeah, that's what happened previous week and what we expect for the week ahead. If you had any other question, don't forget to write in the comment section. I'll try to get back to you as soon as I can. Have a good time. Bye-bye.